Hello everyone and welcome to another edition of the Forex Technical Market Update for Friday, August 14, 2015. Okay, what we have in front of us is the daily chart of the British pound versus the US dollar. And this chart kind of summarizes what has been happening over the last month or so in the markets. As you can see, we're in a pretty tight consolidation pattern. Market is going up and down, up and down, up and down within a very tight range. That's about 154.50 to maybe about 157 with the British pound. And what this tells us is that when the market breaks out of this consolidation pattern, we could see a pretty aggressive price move in the direction of the breakout. So just keep that in mind. Yesterday I spoke about the fact that this is a time that you prepare and you have your powder dry in anticipation of the next big move in the market. And this British pound pair is a perfect example of what I believe we could see some swift price action in the next couple of weeks when we break out of this consolidation pattern. Okay, taking a look at the euro versus the US dollar. The euro is actually down on the morning, and we could be retesting this trend line, this down trend line that was broken. Because normally when we break these lines, you get a retest of the trend line. All resistance becomes support. So that's exactly what the market could be doing at this point in time. And that's why it's important to know the rules of technical analysis and how markets function, because it puts everything into perspective. So you're not really guessing what's happening in the market. You know exactly what you are doing. Taking a look at the Canadian dollar versus the US dollar, we're still above the critical resistance up near this 130 level. We're just slightly above it. The high was at 130.64 and we're now at 130.68. So the market is just slightly staying above this level. And what we're looking for this month in particular is actually where the market closes. If we do close below the resistance level, what we could see is a sell-off in this market. If we close above the resistance level, we could see further gains. So we're looking for the monthly close in the USD versus Canadian dollar. And we're looking for a monthly close because on the monthly charts, we see that the market has not been able to close above this level. Every time it reaches this 130 level, it collapses on the monthly chart. So that's why we're looking to see where the market closes for the month. And I can tell you the smart money and the big money players will be looking to where this market close also. So that's what we need to be looking for. Japanese yen not really doing much. The market has a doji. It's down slightly on the morning, but we retested this trend line. Market broke the trend line. We retested the trend line. We did get a bounce, and the market is just staying above that old resistance area that has turned support. So not really much happening in the Japanese yen, and the market. What we could see, as I keep saying, is that if we get a sell-off in the stock market, we could see this market decline pretty rapidly. So that's something to keep in mind out for the Japanese yen. Okay, but overall, what has been happening? Let's just summarize what has been happening in August. What has been happening is that we are in a time of consolidation, and consolidation essentially means that the market is going nowhere. The market can be in a trending environment, and as trend traders and using a trend trading philosophy, this is what we are looking for. We're looking for to exploit large trends in the market. But this is the chart of the US dollar index. We had a situation where we had large trends, and now we have a situation of consolidation. So the market is not really doing much. Now, at the end of consolidation, we could get a breakout in the markets, and the longer this consolidation lasts, is the more significant the breakout is. You can think of a pipe that is just building pressure and pressure and pressure and pressure and pressure. We have pressure being built up in the markets, and when the market does pop, let's say it's popped to the downside or it pops to the upside, that pop could be worth a couple of 100 pips, because the market has built up all this pressure and then it releases. And that's how you look at consolidation. And another example of market consolidating is the S&P 500. Now, as you can see here, we're in a channel consolidation. Now, the mainstream media, listening to them, they are saying the market is not really going anywhere. It's in a wait and see situation. But as traders, because remember what we are traders looking to make money in the markets. We recognize consolidation, and we know that more likely than not, if the market breaks out of consolidation, we are going to get a move in either direction. So we could get a pretty strong move to the upside or a pretty strong move to the downside. So you do not want to be caught in a situation where you are flat-footed when the market starts to move. That's how amateur investors and amateur traders react, because I can guarantee you, if this market starts to sell off, you are going to hear that Wall Street is in a panic, etc. But as traders, we need to anticipate that this is an eventuality or a possibility, and be prepared for that possibility and have strategies to deal with that possibility. Okay, so that is why during consolidation, what you should be doing is preparing for the next major move, because that is where the profit centers are when you're trend trading. So if you'd like to get involved with the trading signals and to put yourself ahead of the markets and not behind the markets, you can click on the link below this video to get started. Thank you very much for listening, and we're up on the weekend. I hope you have a lovely and wonderful weekend, and we'll see each other here again on Monday. Thank you very much.